What's up, Compound Trading Group? RB here. In today's video, I wanted to bring you market structure, back to the basics, back to the foundation. We'll look at break of structure, change of character, and how they play together. Hope you enjoy. Alright guys, I just want to kind of go back to the beginning here with market structure. So if we have a move, an impulse to a correction, to an impulse, correction, impulse, correction, to an impulse. We know with market structure that we're first going to look at our highest point, right? And then when we get a break of that highest point here, this becomes our low point. And we're always going to look at the leg that created the high break, right? The leg that created the high break. So once we get this break up here, the low point that created that, we get this break and low point. And we know with this right here, we have an uptrending market. So if we have a high, that high was broken. Now it gives us a low. And we have a high, and that high is broken. So it gives us a low. We have a high, and that high is broken, and it gives us a low, and so on, right? That's higher highs, higher lows. That is an uptrend. So now if we go to the downtrend, and we have an impulse move to a correction, to an impulse, to a correction, to an impulse. We're going to look at our lows. And once that low is taken out, it gives us a high. And once that low is taken out, it gives us a high. So in a downtrend, we have a high, right? We put in a low. That low is broken, so it gives us a lower high. That low is broken, so it gives us a lower high. And that low is broken. Within this, a common theme I've been seeing a lot lately in Discord is people want to mark higher lows and higher highs. So say we have a market, right? And we're doing this, and we're making an uptrend happen. And then we come down, and we make a trend, We make an uptrend. And then, we might come up, do this number. And they look at this and they're marking market structure in this sense right here. So we have a low, we have a high, that high is broken, gives us a low, so there's our high. And then they'll come in and say, okay, we have a lower low to a lower high to a lower low, because that low is broken, right? But that's not structure. What this is that we entered into, and this is the golden thing I've been trying to get y'all to find out very quickly, is this is a ranged market. And within this, until this high is broken, or this low right here is our low high pivots, right here and right here. Until these two areas are broken, we are in a range. Now what you have here is a change of character, a break of structure in a lower time frame chart. So say this was the 5-minute chart. In a 1 minute you could have that flip. But on a 5-minute sense, our market structure is a ranged market, and this is the area that you will see EMAs, Fibonacci's, you'll see any indicator worthless. There is no indicator that on your time frame you're looking at that can predict what's happening in here. And so I'm seeing too much of this move here, and people thinking we have a change of character right here, like this being a change of character, right? We broke the high, came up, put in a lower high. when simply in the time frame you're at, this is congestion, and that's a big mistake to make. So you need to be able to catch congestion market very fast. And there are three types of markets. You know, we have the uptrend, we have the uptrend, we have the downtrend, and we have the range market. And as long as the highs and lows aren't broke, we're in that range. And the one thing to know about this is when you go into a ranged market, say you're coming from an uptrend market, right? And you go into a ranged market, your still thesis is long biased until a change of character, break of structure happens. So you see how you stay within the range market and eventually you break out to the high side. And this is simply now we have a high, right? We have the leg that created the high, which would be right here. And this is our new market structure, right? So if we have a higher high, a higher low, a higher high to a higher low. And that's what you want to look for when you break out of a range market. So within this now, I want to talk about change of character. What does a change of character look like? So if we're putting in a market trend, and we have highs, we have lows, what a change of character is going to do is sweep a high, sweep a low. And that's your change of character. So if you're looking at market structure, you know, we have a high. That high is broke. That gives us a higher low. We have a high. That high is broke, which gives us a higher low. And then we have a move that makes a high, but also sweeps our higher low. So this is what we call a change of character. And from this move, you'll see this move right here. You'll see a pivot back up, back into order block liquidity, and the move down. And when you get this move, so our change of character is we broke the high, we broke the low, right? We are now changing characters of our trend. So you need to look at change of character as a trend reversal. This has to break first. The high has to break first, right here. So if you want to think of this, and then the low breaks second, and this makes a clean change of character, right? And then the low breaks, and so there's our change of character with the low, right? We break that low, which makes this a lower high, and this break right here is what you call a break of structure. So with this, you want to think of a break of structure as trend continuation, and you want to think of change of character as trend reversal. So if we have an uptrend, right? Let's go through this one more time slowly. We have an uptrend. We have a low. We have a high. We have a higher low. We have a higher high. We have a higher low. We have a higher high. Now we have a lower low, a lower high to a lower low, right? So as you're plotting that, you have your break of your higher high. Here's your break. Now you have a break of your lower low. That is your change of character. You come in, you put in a lower high, and you break that last lower low. That's your break of structure. So I just wanted to clarify that today to make sure two things. You know, people see change of characters how they actually are, what they are. It's a reversal trend, right? Trend reversal. And then you see your break of structure, what it actually is as your trend continuation. And also, I wanted to make sure you're seeing your range markets. So I'm going to do a quick dive through one more time, right? Uptrending market. Downtrending market. And then we have a range market. And the best way to catch these fast is knowing your trends, right? So if you're doing this and you're making a trend, is plotting your points, right? So if you had a high, if you had a high and you had a low, you were within a range market, even though in a lower time frame you're making market structure. But the time frame you're currently in until your pivots break, high, low, you're in a ranged market. And this is where we say sit on your hands, or trade the top, trade the bottom. And we'll talk about that in a video coming soon. I hope you enjoyed today. I hope you got something out of it. I know it was very basic. I know it can seem very foundational, and you're probably thinking, I already know this, but it's good sometimes to just break down once again, get back to the basics, go back to the foundation, and make sure you're plotting market structure right. Too many times I see people plotting market structure within a ranged market, and it's where you can get really funky and lose a lot of money. So I hope you got something from today. I hope you watch this a few times and look for change of characters in real life situations, break a structure in real life situations, and I hope you enjoy.